Wall Street rallies and signs of progress over a deal to raise the US debt limit. Stocks gained for the second consecutive session to hit levels not seen since August last year. Asian markets open largely higher, while the SGX Nifty is indicating a higher start for the Indian market. Crude prices slip about 2%. Brent trades near $76 a barrel as the dollar climbs to a two-month high on expectations of further Fed rate hikes following resilient US economic data for the month of April. Indigo parent Interglobe Aviation posts a profit of more than 900 crore rupees in Q4 thanks to higher demand for air travel. Revenue rises 75% compared to a COVID-hit Q4 last year. Margin is above 20%. Also watch for earnings from JSW Steel, NTPC and Zomato through the day-to-day. The Finance Ministry defends the move to bring credit cards under the liberalized remittance scheme, says some individuals are breaching the limit and calls for parity between debit cards and credit cards. Adds that LRS spend doubled to $24 billion in the last 2 years. Sebi in a consultation paper proposes sweeping changes to current total expense ratio of mutual fund schemes. The proposal includes bringing GST and all transaction and brokerage costs into the TER. The paper also mentions revised slabs for various categories. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. It's a Friday morning, so last day of the trading week. A lot to catch up on and a lot to talk about. But as always, let's take a look at what the Asian markets are doing right now. Well, largely higher on the Asian markets. So we do have some positive cues coming in from the US markets. So while the Hang Seng markets are seeing a big cut here, 1.5% on that one, the Taiwanese index is higher right now. So it's only the Hang Seng index and Shanghai which are in the red in the Asian markets. We have the Nikkei, which is higher by 0.8%. Kospi is higher by 0.4%. A lot of rub-off that we are seeing from the moves that we saw in the US markets as well. And that is something which is being seen right now. The SGX Nifty, that'll come up for you on the screen because that one is indicating that the start for our own markets could be in the green. It has come off from the highs though, 16 points higher on the SGX Nifty right now. And remember, SGX Nifty did indicate a higher start for our own markets yesterday as well, but we ended in the red. So it'll be important to see which way things go for our own markets today as well. Let's talk about the US markets now. Wall Street ended higher with the Dow Jones up around 115 points. S&P was up almost 1%, while the Nasdaq closed with 1.5% gains. Investors continue to monitor the situation surrounding the debt ceiling. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
The major averages finishing the day up more than 1% across the board as traders bet on a debt ceiling deal being reached in Washington. The Dow finishing up 408 points, the S&P tacked on 48, while the tech-heavy Nasdaq climbed 157 points. Target says that it expects organized retail crime to grow this year to a staggering level. The retailer said it expects to see additional losses of $500 million in lost and stolen merchandise on top of the more than $750,000 worth of shrinkage, as the industry calls it, that it saw last year. With the anticipated increase, total inventory loss this year would surpass $1 billion. CEO Brian Cornell said the company has taken measures to prevent theft and keep its stores open. Meantime, wildfires in Canada forcing a shutdown of part of that country's oil industry. It's a precautionary measure as drillers adjust to shifting fire conditions, but nearly 2.7 million barrels of Alberta's daily oil sands production sit in very high or extreme wildfire danger zones, according to an energy consulting firm. That, combined with increased optimism around debt negotiations, were enough to push oil prices higher today, crude climbing nearly 3% on the session to $17.82 a barrel. That's what's happening here in the U.S. Back over to you in Mumbai.
Okay, all right. On that note, let's also listen into Mona Mahajan of Edward Jones and Scott Cronert of Citi as they speak on the U.S. markets and the outlook going forward.
In the near term, we do think that this tech trade could persist. It probably does have some legs, and there's a couple of reasons for that. One, of course, when you look at the breakdown by sector, there's only 3 sectors that are outperforming the broader S&P 500. Those are, of course, comm services, technology, and consumer discretionary. 2 of those are back in bull market territory, so up 20% plus. After an economy goes through a downturn and as we enter a recovery phase, that's when we see broader participation, small caps, cyclical parts of the market, even international and longer duration bonds. we haven't gone through that process yet. So there is some room to run, we think, for this trade. But as we look 6 to 12 months down the road, keep in mind the broader participation we do think comes back to some extent.
The growth leadership of the S&P is pretty clear. We think it accounts for nearly all of the move year to date, and it's mostly a multiple expansion move, okay, much more so than an earnings move. But clearly, we think there's still, room there for a shock. The shock that we've been thinking that could unfold would be your debt ceiling issue. We'll see how that plays out from here. We don't think we're out of the woods. We are now starting to talk a little bit more about, no matter how this plays out, you're looking at an ongoing wave of fiscal restraint.
All right, that's the global market action, but how will these overnight cues impact our own markets? We have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you and happy Friday. Rima, let me come across to you first up. What is the market setup looking like today?
Well, the SGX Nifty is suggesting a bit of a flat start, but with a positive bias. For the last 3 trading sessions, the Indian markets have been under pressure. Yesterday, in fact, despite having positive global cues, the markets opened slightly higher, but it sold off towards the end of trade. So the bias, the momentum has, become a bit sluggish and waned to some extent. US markets had a positive close yesterday, while the Dow was only up 0.3%. The Nasdaq gained close to about 1.5%. The resistance level for our markets will be on Monday's high. On Monday, the Nifty made a high of 18,458. That will be the immediate resistance. On the way down, it could be levels around our 20-day moving average, which is about 18,050, give or take a couple of points. The FIs net bought 970 crore in the cash market. The DII sold 850 crore in the cash market. Largely, the numbers which have come overnight have been positive, whether it's Interglobe Aviation, Bata, or even a United Spirits. So there are more hits than misses when it comes to the large numbers. But again, another big day of earnings. In terms of the Nifty earnings, it's going to be JSW Steel, NTPC, Power Grid. But X of that, in terms of the mid caps, you've got a lot of big numbers, Bandhan, Muthoot Finance, Zomato, for instance, and that's going to be critical after yesterday. We had their peers, Swiggy, say that they've turned profitable in the food delivery business. So a lot of mid caps should be on your radar, including a PNB. Back to you.
Oh, yes, that's a long list, right? But let's add on to that list. Sebi is joining in with all the stocks that'll be in focus other than the ones that Rima mentioned. Hey, Sebi.
Hi, Sonal. So let's start with PI Industries first. A decent set of numbers. The revenues and EBITDA both were up 12%. The margins were maintained at 21.9%. Next is Container Corp. The revenue was up 6%, the EBITDA was up 8%, and the margins came in at 20%. Indigo, a strong set of numbers over there. The revenue was up 77%. It turned profitable versus a loss last year. Bata, the numbers were better than expectations. The revenue came in at 779 crores versus a poll of 765 crores, EBITDA at 179 crores, and margins of 23% versus a poll of 21.5%. And lastly, United Spirits, the numbers were better than expected. Net sales up 16%, slight pressure on gross margins, and EBITDA was down 6% at 338 crores.
Okay, all right. Thank you so much, Sebi, for that. Finally, let me go across to Mangalam, joining with all the cues from the F&O space. Mangalam.
Good morning. So yesterday we did see a sell-off in the last hour on both the Nifty as well as the Nifty Bank, but perhaps was that a par for course or not is the big question, largely because that sell-off was on account of the weekly options expiry. All the put writers on the Nifty positioned themselves for support at 18,200, and after that was broken, those put writers were caught on the wrong side and they had to unwind their positions. And similar was the case for the Nifty Bank as well. It started to sell off more aggressively after it fell below that 44,000 mark itself. With this and the decline that we've seen in the last few trading sessions, the Nifty has fallen about 330 points from the recent high of 18,459 itself, and that will be an important resistance on the way up. However, the good part is the Nifty is holding at the low of 18,105. In fact, day before yesterday as well, the low on the Nifty was 18,115. The internals of the market are strong. The FIs, they continue to buy in cash market. Yesterday as well, there was purchase of close to about 1,000 odd crores. And in index futures too, they bought about 650 crores, which was more towards long addition and some short positions being covered. Next week is the May monthly expiry, so that's something we'll watch out for. Ahead of that, the momentum in terms of the FI flows definitely with the bulls. 49% long exposure, inched slightly higher from 46% yesterday. And the active options for next week, we still see some writing at the 18,200 put. And that's interesting. 18,300 call, understandable for there to be some writing there, given the sort of decline that we've seen from those levels. So 18,350 to 18,400 would be a resistance, but 18,200 put, remember this is an out of the money put, and we're seeing writing out there as well for a premium of 110 rupees, telling you that 18,100 is an important support zone. We've also seen writing at the 18,100 put for a premium of 60 odd rupees. The SGX Nifty is indicating a positive start. Let's see where that goes, because we will face resistance between 18,350 and 18,400, but important to watch out for support levels, because both the Nifty as well as the Nifty Bank are currently at crucial support levels. Nifty support is 18,100 to 18,150, whereas the Nifty Bank 43,700 to 43,750.
Okay, all right. Rima, Surbi and Mangalam, thank you so much for joining us and prepping us up for this trading day ahead. We'll do one thing, slip into a short break. When we return, State Bank of India reported a strong set of fourth quarter numbers. We'll get you excerpts from our conversation with the management on the other side. Stay tuned.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell, right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
Yes, it's okay for us to nod for everything. Because we are parrots. Yes, but your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Z Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Welcome back. It's time to focus on some important earnings now. State Bank of India reported what was a stellar quarter during market hours yesterday, beating street estimates almost on all fronts. The bank reported the best net interest margin, return ratios and asset quality in 8 years. Deposits saw a growth of 5% on a sequential basis, the best in 4 quarters. In fact, SBI Chairman Dinesh Kumar Khara spoke to my colleagues Ritu Singh and Abhishek Kothari on their performance, ECL provisions and more. Listen in to what he had to say.
We have started seeing the capex-based demand coming in, and when it comes to the underutilization of the term loans, it has come down, and so to that extent, it is more of a capex demand in the corporate loan book which you are witnessing. The second question relating to your deposit question, well, of course, I would also like to mention that we still have excess SLR to the tune of about 4 trillion, and when we look at our domestic credit deposit ratios, it is somewhere around 65-66%. So we have got enough elbow room available, and we are not really increase in deposit rate is essentially to retain the franchise value and also to take care of the depositors' interest. Retail continues to be as promising as it has always been, and similarly when it comes to corporate also, as I was mentioning, we have got a very clear visibility of about 3.5 trillion worth of assets. So almost 50% of that is already sanctioned, and the documentations are being done, and the remaining 50% is under process. So I think I expect to see reasonable opportunities for growth in the corporate book and the retail book, and similarly in SME and also in the agri book. And in agri book, we are trying to get into high value agricultural advances, and more so we are trying to get connected with the startup ecosystem who are operating in the agricultural sector.
Okay, all right. That is SBI. Moving on, the Finance Ministry has issued clarifications on the liberalized remittance scheme. The ministry, through a list of FAQs, has defended its decision to bring international credit card spends under LRS. Government has also said foreign remittances under LRS have doubled between FY21 and FY23 to $24 billion, with 50% of the spends under the scheme coming from overseas travel alone. Sapna Das joins us with more details on this one. Sapna, what does the clarification say?
Yes, and in pretty strong words. And let's look at the argument that has been used by the government on many fronts. So first, what they're saying is that since there was an exemption given to the use of credit cards for international travel and stay, that exemption has been misused because a lot of cards have been issued above the LRS limit of $2.5 lakh. So that was one large issue. Also, payments by debit cards have been treated as LRS even earlier, which means all other modes of electronic transaction have been under this cap, but credit cards were the only exemption, so to speak. Third, and very important, RBI since quite some time has been telling the government that they need equity of treatment between the credit cards and debit cards in terms of usage of forex abroad, because they need uniformity and equity in the treatment of modes of withdrawal of forex. Also need to capture total spend under LRS for prudent forex management and prevent the bypassing of LRS limits. So here I think the regulator has also played a very important role, and government has gone along with that. Last but not the least, even if you look at it in terms of the remittances, there has been a big jump. FY23 over FY21, $24 billion. It was just $12 billion in FY21. So it's more than double, and 50% of that is coming through the international travel route. So this is one big argument, defense, reasoning that has been put out by finance ministry. They're not going to go back on this proposal at all. No way. The second thing also, they've clarified in terms of why the TCS rate has been raised, and that reply is also pretty interesting. They're saying that wherever a 20% TCS is applicable, you can have some adjustments in your advance tax payments. That's one. Second, this is not a very exorbitant rate, especially for people who are on that 20% and 30% income tax bracket. That's a kind of, that's a kind of observation that has come through from government. No going back on this, and we'll have to wait and watch and see that how this really impacts your travel, your transactions, the value of transactions, so on and so forth.
Sapna, thank you so much for joining us with those important details. Moving on from one important story to the other, the Sebi has released a crucial consultation paper on expense ratio norms for mutual funds, calling for sweeping changes. Transaction charges and GST currently fall outside the purview of the total expense ratio, and the market regulator has proposed these expenses be included within the TER and has also suggested new slabs for the same. It also proposes higher total expense ratio slabs, which will be applicable at the AMC level and not for individual schemes. Variable expense ratio slabs, depending on the performance of a scheme, are also likely to be explored in this particular consultation paper. In fact, that's not it. The market regulator has also proposed stricter norms to investigate suspicious trading activity. In another consultation paper, Sebi has defined a framework for starting investigations if it detects suspicious activity and also impose penalties if no effective counter is presented. The new norms are targeted at reining in profits made without any fundamental basis. According to the proposed norms, unusual trading pattern combined with the existence of material non-public information points to suspicious trading activity and can be termed unexplained suspicious trading activity if entities fail to explain such activity or trades. Okay, a lot of updates coming in from the regulator. We'll keep analyzing them for you. For now, we'll slip into a break, and up next, we'll get you all the cues from the commodity market. As always, stay tuned for that.
ये स्नैक्स एंजॉय करने का नया तरीका है, स्मार्ट तरीका है। पर आपको पता है और क्या स्मार्ट है? इन्वेस्टिंग ऑन एंजल वन, जीरो ब्रोकरेज एंड फुल कन्वीनियंस। अब तो मैं सिर्फ फूड शेयर करता हूँ, ब्रोकरेज नहीं।
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.
Film shoot, iPhone 14 Pro पे, amazing camera, huh?
And cut. Hang on, director को भेजना है।
Beach से कैसे? Those 4K videos are huge. यहाँ juice तो मिल गया, Wi-Fi कहाँ से मिलेगा?
Airtel 5G Plus तो मिलेगा।
So you've
already got it. Maybe you should get it too. Back up, guys.
What if you could get your goods to the right place at the right time all the time? With IBM Consulting, AI-powered software can help automate your supply chain so products can be ordered, produced, and delivered more efficiently. What will you create? IBM. Let's create.
Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. It's time to talk commodities now. Manisha Gupta is joining us as always with all the update from the commodity markets. Hey Manisha, good morning. Friday mood in the commodity markets or not?
Well, I can't say that really because you have the U.S. Fed chairman, testimony today in the evening. So that speech is what the street is really awaiting. But ahead of that, it is the U.S. dollar index trading at a 7-week highs, and that seems to be putting pressure on commodities. So you have the gold prices declining for a third straight day, and they are trading at a March lows, and we are all the way back down at $1,960 per ounce with nearly 3% of a decline in this week. The decline also has been seen in case of the crude oil prices, where we also are looking at higher inventories this time around, and there is a bit of a buying, of course, after 14% decline in the past month. So we still are headed for a weekly gain of 2 to 3%. But the metal prices also, after nearly 2 days of gains, the last 2 sessions that is, most of them are still headed for a decline this week. Copper, for one, is headed for a 5th weekly decline. The strength in US dollar index clearly weighing across commodities.
Okay, all right. So that's the commodity market action. Thank you so much, Manisha, for joining us with that. Moving on, the annual G7 summit kicks off in Hiroshima in Japan today. US President Joe Biden arrived yesterday and also met with the Japanese Prime Minister on the sidelines of the summit. China and Russia will be on the top of the agenda. CNBC's Martin Soong gets us the details from Hiroshima.
Folks, yeah, it is day one of the G7 summit here in Hiroshima, and the important thing to know is he made it. Well, by that, I mean U.S. President Joe Biden made it. He arrived late yesterday at about 4 p.m. in the afternoon, Japan Standard Time, and interestingly, he came in aboard Marine One, not Air Force One. Air Force One landed, obviously, with him on board at Marine Air Station Iwakuni, which is just south of Hiroshima. Then he got choppered here to Hiroshima and at the summit. One of the first things that he did, of course, was meet his host, Japanese Prime Minister Fumio Kishida. They held a bilateral, and the president had warm words for Japan and for the relationship. Take a listen.
I'm proud that the United States and Japan are facing it together. And, we stand up for the shared values.
U.S. President Joe Biden. So I've been continuing to say this morning that, look, the important thing is he is here. And the reason I say this is because the backstory is, remember, there have been reports that he may have had to bail, reports that he may have had to cancel his trip out here to the summit because of the ongoing crisis in the U.S. over the debt ceiling. But in the event, talks are continuing, and he has carved out time to be here at the summit, having...
In fact, Prime Minister Narendra Modi is also headed to Hiroshima for the G7 summit. He's expected to hold a bilateral with US President Joe Biden and then attend the Quad leaders meet in Australia. He will also visit Papua New Guinea for the India-Pacific Islands Cooperation Summit. Moving on to some news from the world of sports now. Tennis legend and 14-time French Open champion Rafael Nadal has announced his withdrawal from this month's tournament, owing to a hip injury that has kept him out of action since January. This is also the first time that the 14-time winner is missing the French Open. The tennis star also hinted at retiring in 2024 and is set to take a break to prepare for what could be his final year as a professional tennis player. Okay, all right. That would be some news to tennis fans as well. But let's quickly take a look at what the Asian markets are doing. They were largely higher when we started the show, and that trend continues, barring Hang Seng, which continues to be in the red, a 1.4% cut on that one. Taiwanese index flat with some positive bias, so these markets are coming off from the highs, and Hang Seng has extended the losses as well. SGX Nifty is indicating a start in the green, 22 points higher there, but we'll have to see whether we continue that trend or not, because yesterday we closed deep in the red. That's all we have for you on Power Breakfast today. Stay tuned. Bazaar Morning Call comes up next.